Hey, everybody, welcome to this episode, a special episode of Tech Intersect Podcast. I'm here with one of my great friends through the years and someone who I have the utmost regard for, the way that she moves in the world. And it makes me think of even just going back in the day when I first had my own publishing company, Legal Right Publications. This wonderful woman who is with us today is Lynnette Khalfani-Cox. She is entrepreneur and consultant, personal finance guru slash expert to the world. She is certainly a best-selling author of over 15 personal finance books and counting. We'll talk about the latest one coming up soon as well, but you may have heard of the New York Times bestseller, Zero Debt, The Ultimate Guide to Financial Freedom. Television personality, an investor, but most importantly, a wife and a mother. And everything else flows effortlessly, as she will tell us from that. But she's so grounded, so centered, so supportive, not the least of which is contributing a forward to Digital Money Demystified. And as we will talk about in a moment, definitely making it better, because there is no future of money and wealth if there is not a proper solid foundation. And so I thought it was so important to have that foundation and influence, those influences for the book as well. It's not enough just to demystify the crypto space without a solid underpinning. So we will talk about all of that and more in a moment. But first, Lynnette, welcome.
Thank you so much for having me. I've been so looking forward to this conversation.
Thank you. Well, the first, I just want to, this moniker that you have, the money coach, is for many reasons, for your trademark reasons and all those things, just really, really important because it's grounded in and focused on the support that you give to allow people to really grow and be their fullest self. It's not even necessarily, and correct me if I'm wrong, but this is the way I think of it, not even necessarily money, but the freedom and the power that comes from very intentional living from a financial point of view. So as the money coach, you've undoubtedly touched infinite lives at this point with your financial wisdom. What inspired you to delve into the realm of personal finance, especially for women and for people of color?
Well, I've been so blessed to be doing this now for 20 years. I can't believe it.
Mm,
In truth, a lot of me getting into entrepreneurship was rooted in my past experiences, um, past failures, past
hmm
mistakes, past financial traumas, if I'm honest.
Right.
um, Everything from growing up very, quite poor in
hmm
Southern California, single mom who raised me along with my four sisters. And then also, you know, coming of age, doing the graduate school thing, getting a first good job, and then moving on to working at Dow Jones.
mm
And I was a reporter, I was a bureau chief, I was an editor, and ultimately I was a Wall Street Journal reporter for CNBC.
mm.
And I started learning like all of these things about money and personal finances, and I was like, oh, okay, this is not rocket science. I can do this too. And I really, really loved what I was doing. Basically, I was teaching people about money
hmm
through my writings, through the segments that I was doing on air. And then I started writing, while I was at CNBC, I started writing my first book called Investing Success. And I got Charles Schwab to write the forward to the book.
Not
But
insignificant.
it
That little thing.
was a win. I think this was the first time he did that. But then a financial blow hit. I got
Mm,
laid off from my job, and me and 200 other people. And so I was like, oh wow, what am I going to do now?
right.
And really, I just kind of made the decision to continue doing what I loved. And
Mm-hmm.
I loved talking to people about money. I loved sharing insights and explaining, complex money matters and making it understandable and digestible for folks. And so I said, just because I'm not doing this here, as a Wall Street Journal reporter, on air at CNBC, doesn't mean I can't do it. I'm just going to
Right.
do it for my own self, for my own brand. And that is how the Money Coach brand, initially developed.
Mm-hmm.
I was working with, then my a consultant that I hired, Earl Cox, who ultimately became my husband.
I've heard of
Um,
that guy.
you've heard of him. And my sister, Debbie, um, rest in peace, who passed away in
Mm,
2014. But together, collaboratively, we came up with this name, the Money Coach, because we really thought it kind of symbolized what I wanted to be a
mm-hmm.
financial educator, to have a platform, to talk to people about money matters in a way that connected with them, to use multiple forms of media, whether through books, through article writing, blogs, television appearances, speaking engagements. And so it kind of encapsulated all of that. And that was really the roots of it. And I'm so glad because 20 years in, I've not looked back. I do way better working for myself
I know
than
that's right.
So it's been a great ride. Obviously, not without its ups and downs. Any entrepreneur can
Hmm.
tell you that's the truth. But I'm really super happy that I made this transition.
Yeah, that's also a seat and source of empowerment as well. And even though, I say that I'm the hashtag CEO of me. Sometimes
Mhm.
I'm on loan to, primary institutions. I am a full tenured professor, but I'm an entrepreneur for sure. I am a writer, speaker, and teacher. And that has changed. It ebbs, it flows. We are evolving, and necessarily the way that we connect with people has to evolve too. How have you seen some of the ways, you mentioned media, it makes us think when I first met you all, and I had my series of legal reference guides for writers, and I remember one of the first workshops I did. There was a company called Ex Libris that was just trying to break into the ebook realm, and they came and sponsored one of my workshops, and they were the new kids on the block, to be sure. You have witnessed firsthand the evolution of the publishing industry and the media industry from many sides. How has the change in technology, just from a content creation and delivery point of view, allowed you to pivot to impact more lives as you continue your work?
Well, it's been a constant evolution in terms of the role that technology has played in publishing and in content production, distribution, and marketing as a
Mm,
whole. And now, the past year, we've really seen things get put on steroids with AI, obviously,
absolutely.
right? So for me, it was, whether it's an Ex Libris or Amazon
Mm,
as a distribution point for books, or knowing other channels, because as you know, my husband, who is my agent and business manager, is also a book agent and
mm-hmm,
publisher. And so we've seen, many different facets where the self-publishing realm in particular has been able to take off because of digital printing, because of printing on demand
mm-hmm.
as a technology where that wasn't even an option before,
Right.
So it's really opened up the category as a whole. It's really allowed a lot of folks to come into the space more, not only as authors, but as small presses. And we do own a
Mm,
small press as well, a
mm-hmm.
publishing company, too, as a matter of fact, if I'm honest.
Okay.
And so I just think that it's leveled the playing field in a lot of ways, and that it's opened up new avenues so that you can, whether you're thinking about putting out, if you're, say, an author and you're promoting a book, you can create an entire calendar for social media, line up your posts for 30, 60, 90 days, or for a year if you'd
Thank
like.
goodness. Right.
Yes, none of that was available before,
No.
so it's been a big help in terms of facilitating speed of execution, and ease with which you can accomplish certain tasks more
Mm-hmm.
efficiently and, frankly, in a more cost effective manner as well.
Right. We were talking about how technology has changed our ability to connect and to educate and to empower. Obviously, technology has also, this intersection of finances and technology has really, really um, accelerated. Bitcoin first came on the scene with the gangster lean in January of 2009. We saw the rapid proliferation of just thousands of tokens when the Ethereum ecosystem just exploded in 2014, 2015, and a lot of issues at that time too. It actually predates even me having an awareness of the space. By the time I started to learn about this magic internet money, wasn't quite sure about that. Didn't see anything wrong with my current money, and I'm not getting rid of any of my money or assets anytime soon. So I was not at that time in 2017 nearly as interested in the digital programmable money at the time. I didn't even have that language then. But I was curious about the technology. I was curious about this novel way of organizing and protecting and securing data using some of the same technology, the internet, peer-to-peer technology, using those types of things where in a Web 2.0 world, we were using it to exchange messages around creativity and work and play. Now we're using the same technology to exchange value. It's a different message, far more valuable, clearly has the potential to disrupt um, government issued currencies. It has the full attention of every government in the world. As you started to see technology impacting finances in this way, what were your first reactions or any myths or realities around digital money?
Well, I actually first started looking at this from the consumer's perspective.
Mm,
I'm always looking, to be honest, first and foremost, from the consumer's perspective.
mm-hmm,
But I really started thinking about the ways in which fintech as a whole, financial technology, was helpful and additive to people
mm-hmm,
in so many ways. Whether it was, simple things like digital banking.
mm-hmm,
So you talked about, the entrepreneurship route and, being on loan to organizations and just clients and things of that nature. Obviously, as a CEO and a business owner, I have clients, etc. So one of my clients, for example, is AARP. So in 2019, I did an entire fintech curriculum that I
mm,
developed for them, right? And it was really about teaching older adults, folks who are 50 and above, about how to utilize um, everything that they needed to do from a financial banking perspective, right?
mm-hmm,
So, again, how to take a picture of your check, maybe your social security check or something, and to be able to deposit that check remotely and
mm-hmm,
to have that done. And oh, wow, I don't have to go to the bank to do it. Look at
mm-hmm,
that. It's so convenient and easy. How to set up electronic alerts and notifications, to how to do, transfers from one account to another. So really all of these are various forms of digital technology, right? That are
mm-hmm.
very helpful. So I just started seeing, and I saw this before 2019, but I just happened to raise this as a very, a sort of more recent example.
Mm,
um, I started seeing all of the ways in which technology was helping us. I mean, how far back do you want to go? Because you can go
right,
back to thinking about the ATM. I mean,
right.
really, it's a form of technology where, oh, I don't have to go in to talk to a bank branch teller, for example.
Mm-hmm,
We're sort of automating this process of either receiving funds, depositing, transferring, facilitating transactions. So I
mm-hmm.
was always interested in that and always thought, frankly, that it was a good thing. Um, I was looking for the ways in which we could cut costs, how it could be, again, additive and helpful to consumers, right?
Right.
But I also always saw all along the way the gaps and where it was that some folks were being left out,
Right.
and that some communities didn't have access to, various technologies, didn't even have, whether it was a bank branch in their community, or otherwise.
Right.
So, just to put a bow around this story with
Hmm.
AARP, for instance, created online content, created, articles, coursework, videos, things of that
Mm.
nature. They turned it into workshops all around the country.
Mm.
And then, of course, what happened in 2020? The pandemic hit. And so they were so happy to have this content live online,
Hmm.
and to be able to point their, tens of millions of members who were saying, I can't even go to the bank or to my credit union
Right.
and cash my check. What do I do? They were saying, here, this is how you deposit your check remotely, for instance, So they had that online to be able to show those older adults. And by the way,
Hmm.
our company was then um, selected, really, by
Right.
ARP as kind of like their small business vendor of the year as a result of
Wow.
that. But
Wow.
it came right at the right time. So fast forward, whether we're talking about cryptocurrencies and others, I mean,
Hmm.
look at what is evolving. I mentioned artificial intelligence now,
Mm.
right? But we're seeing so much happening at scale. Um, I mean, and I could go on and on, but I feel like a lot of this, when we're looking at, de-dollarization, that's,
Hmm.
clearly a trend that's firmly in place. Again, I think that that's going to be part of what is going to facilitate not only greater, of course, institutional interest, but greater
Hmm.
retail interest in the crypto space, and in um, Bitcoin specifically, and in blockchain
Right.
technologies, whether it's use case for, various altcoins you mentioned before,
Hmm.
obviously BTC first, but you know take a look at that, take a look at other,
Absolutely.
alternative. Yeah, so I don't know, we're seeing this
Yeah.
evolution in real time, and it's, I think, an exciting time
I do
to
too.
learn, and that's a huge component, because we have a Herculean task to do, to educate folks, because it's not, people don't even have the basic financial
Right.
literacy skills with, dealing with fiat money, dealing with,
Right.
so now you're conceptually talking about something that is an intangible, but that has so many potential uses and applications and
Hmm.
benefits in a
Right.
hugely positive way, but that, presents, I think, also some potential challenges too.
Absolutely. And that's the level-headed and prudent approach. It's not an oxymoron to say like prudent cryptocurrency investor, right? Even though we're like that can't possibly coexist. It actually can.
It
I'm a
absolutely can.
testament to that. I'm one of the most risk averse people you would ever meet. I'm licensed in 4 states to practice law. I'm a full tenure professor. I worked as you did, very hard to get in our position. I have no intention of doing anything to undo all of that.
Absolutely.
But also, I've just been an early adopter of many things, intellectually curious, and I believe so much in the power of a first mover advantage.
Hmm.
And particularly, I think that you have seen also the Ariel Schwab Black Investor Report from year to year, and know that last year was the first year they included the Black crypto investor, and had so many great statistics there. I did take some issue with the conclusions, not
Hmm.
issue with the conclusions, but I love the word that you used earlier. There could be an additive narrative to and questions that should be raised. Why should, for example, Black and brown folks in general, Black people in particular, over indexed in something seen as, not just seen as, this nascent asset class? There's a lot of volatility, there's a lot of upside and a lot of downside. Notionally, I've gotten, 6 figures up, 6 figures down. I'm in it for the long haul, and it has been transformative to me personally, my bottom line, and professionally in the way I've pivoted. Um, but there's a story there that we need to unpack about why traditionally conservative folks, from a financial point of view, would take the risk, often to the exclusion of more traditional assets. Why would a segment of the population here in the United States, and certainly abroad throughout the diaspora, lean into this potential? What it signaled to me, and I'd love your thoughts on it, the idea of the systemic marginalization of Black and brown folks, of women, or redlining, the impact on the traditional ways of not just being a high income earner because that's taxed at a higher rate, but participating in retirement benefits, getting a job that would lead to it, being able to participate in the quote unquote American dream of owning a home, of not starting over from generation to generation. And the ability through capital assets, and crypto is taxed here in the United States as a capital asset, the ability not to just own something that in and of itself has value, but that you can, enjoy capital gains, and you will certainly suffer losses, but that is really what moves the needle on wealth in one generation and intergenerational wealth. So I think that story was really missed. That presents the opportunity that you talk about, and that I certainly focus on in terms of giving people the necessary skills and tools and resources to make the decisions that would support generational wealth in the future of money and wealth. So I'm definitely interested in your thoughts on that theme.
I think most of it boils down to one word, which is mistrust.
Mm-hmm.
And, when we look at why Black folks and Black and brown folks, certainly initially,
Right.
we know the cycles over indexed on Bitcoin, for example, as you mentioned. A lot of it was tied to, as you mentioned, this idea that I don't really fully trust the banks. I
Right.
don't, maybe I've had a bad experience, banking while Black. Maybe I've been
Mm-hmm.
looked at crazy with a side eye when I tried to cash a check.
Very much
Um,
same.
you know, yes. Or maybe, as you mentioned, my mortgage didn't get approved and I feel like I was, um, or I did get approved, but I got approved at a rate that was, higher than I anticipated given my income, my credit score, et cetera, et cetera.
Mm-hmm.
We know, I mean, there's been studies by the Federal Reserve Bank that said Black women in particular, tend to get steered into subprime mortgages or get
Mm-hmm.
higher rate mortgage loans, even when they have the exact same credit score, income, assets as other, as white applicants, for instance.
Mm-hmm.
You mentioned redlining, and that history. But we've had, frankly, 400 years of financial exclusion. I'm not saying that there hasn't been improvements. There
Sure.
absolutely have been. There's no question. And I'm not saying that there's not institutions that are very much committed in working towards trying to help, with financial equity, help
Mm-hmm.
close the wealth gap. But we still have an 8-to-1 gap, wealth gap. It's still here. We still
Right.
have, you mentioned home ownership. We still have, a 30 percentage point gap in home ownership. White folks own about 75% of white folks own their own homes, and only
Mm.
about 45% of Black folks own their own homes. And in America, home ownership tends to represent about 70% of people's net worth or their wealth.
Mm-hmm.
So I think that the opportunity was there because of the mistrust factor, right? It's the same reason we've seen the rise of neobanks,
Right.
right? Because there was an opportunity and they slid right on in there for that to fill that gap
Mm-hmm.
where people felt I'm getting nickel and dimed by these banks, etc.
Right.
So there was all of that. And then I also think the second part, besides the mistrust factor, which the industry has to have its reckoning on and has to
Mm-hmm.
address. This is a systemic issue. It's not just, something in our heads or something we're making up or.
Right.
Um, so I think that in addition to that mistrust issue, there's also the idea that we're playing catch up and that we've had this, generations and generations, like we will never be on par if we don't do something transformative.
Mm.
So for some people, I do think that some people were ill-advised in terms of their entry. They just sort of, they felt like they were gambling. They were kind of
Right.
rolling the dice. They were putting all their money into Bitcoin all at once, and then they just panicked. They didn't.
Right.
They don't have a long-term objective. I tell people all the time, I'm definitely still invested, but I'm a
Absolutely.
long-term investor. I know I'm going to go through cycles. It's the
Mm-hmm.
same with the mutual funds that I own. So I tend to have actually a higher risk tolerance. My husband tends to have a lower risk tolerance. I
Mm-hmm.
have a diversified, portfolio of assets. I have real estate as well. I have other things. Obviously, I own a business. I have
Right.
cash position. Just to round out the mix, what that is appropriate for us. But overall, I also think that for a lot of Black and brown people who initially had that spark of interest in cryptocurrency, it was like, this is a way I won't call it get rich quick, although there was
Mm-hmm.
a segment of that, let's be
Right.
honest. But it was like, I can kind of get on par, because this is not about me walking into a bank and somebody seeing the color of my skin,
Right.
saying I'm Black or I'm brown, deciding to, shade me or not, to be prejudiced against me. This is an anonymous marketplace for me, where I can be on a level playing field, and maybe I can
Right.
play catch up. So I think it was kind of like a combination of both of those that drove that initial kind of push. And I
Mm-hmm.
think now the onus is upon us to, again, as I mentioned, to continue to educate,
Right.
to tell folks. It's like the people who even if they got burned in the stock market, they're like, I'm never going to buy stocks again. It's
Right.
like, no, you have to learn about equities. And by the way, do you know anything about fixed income securities like bonds? Like, you got to
Right.
balance out your portfolio here. Do you have anything in cash? So we
Right.
have to teach them about diversification. We have to teach them about risk tolerance. We have to teach them about asset allocation. There's a whole educational piece to be done here, is what I'm
Mm-hmm.
saying.
It's so fantastic, and we are so aligned on the strategy because I've never, despite all of my education and mother who's a lawyer, father who's a surgeon, and all of these things, I learned more in the last 6 or 7 years about finances because this whole push was like, yeah, be your own bank. Wow, that's a lot of responsibility. So on one
Absolutely.
hand, we're talking about self-determination and collective work and responsibility and cooperative economics from a Kwanzaa point of view, which I found really, really interesting because a lot of those principles from an African diasporic or
Mhm.
African American centered point of view align really well with cypherpunks, which is something I
Yes.
never really saw coming. But this idea, because you mentioned mistrust, it makes me think of how within a community you could have like a susu or something, and folks get together because they know each other and the families, and you have one person who's going to hold. There's a lot of trust that's built in. But when you start doing business outside of your community or outside of your trusted circle. That's the reason that we needed intermediaries. Like, I don't know you, but I'll trust this bank, this
Right.
lawyer, this whatever. We're actually, because of this decentralized method, really returning
Yep.
to a time before that, right? So,
Hmm.
this is the latest way to recenter ourselves as a matter of power, but that's a lot of responsibility. And without a financial foundation to understand the language of investment, the language, even if you're not directly investing, how you build a company that will do well in the Web3 environment. These are all things that we have got to learn this language and not wait for permission for somebody else, because by the time you quote unquote get permission, it's often too late,
Right.
particularly for us. And so that's why bringing you in, I'm mindful of your time. So I wanted to just get your take also on, given what you just said and kind of how we've summarized it, moving to your participation in digital money demystified. I love so much the voice and the point of view that you brought to your forward. Can you talk about why this topic and this book resonated with you, and why you believe that this would be a good foundation for people to build and learn more? Learn before you earn, learn while you earn. I don't know, but we definitely have to learn.
Yes. I was super thrilled to write a forward for Digital Money Demystified, because one, I'm all about financial inclusion. And I
Mm,
absolutely believe that that's part of the revolution that's going on right now. And so, two, as I mentioned before, I think that we all have a huge job to do in educating people. And I
Mm-hmm.
appreciated that that was the approach that you took. You weren't trying to tell people, you weren't trying to sell them on it to say,
Right.
here, this is what I want you to do and just buy, buy, buy. It wasn't about that. It was like, I want you to understand this.
Mm-hmm.
There's other things that are going to tell you how to trade and, do other stuff, but that's not what this book was about.
Right.
So, you mentioned something that was really powerful a moment ago about the responsibility. Like we can say, "Oh, be your own bank" and all that other stuff. Yeah, but
Right.
that comes with a huge responsibility. And frankly, the track record that we have in the U.S., starting with here,
Mm-hmm.
of people trying to, let's say, be their own bank or manage on their own, the track record that we have is abysmal. It's
Right.
not good at all. And I guess the closest sort of comparison, or analogy that I might draw is with the 401k,
Mm-hmm.
right? So, you know, our parents, grandparents, they might have had a pension. They had a, you know, um, certain plan that said, you're going to work here for 25, 30 years. And then when you retire, you're going to get a specific benefit. And here, this is what your money is going to be, defined benefit plans, right? We had that shift away from those defined benefit plans to defined contribution plans like
Mm-hmm.
401ks. And the employer was like, I don't want to, no, I don't want to have to say that I'm going to have to give you a specific amount. I want you to manage it. I want you
Mm-hmm.
to take the responsibility. Whatever that winds up being 25, 30 years down the road, that's on you as an individual. So now the onus is upon the individual to manage their own 401k. It's like,
Right.
oh, okay, you just giving me some money, but I have
Right.
to figure it all out. And look at, most people are clueless about it. They don't
Right.
know what to do. And, even Ted Benner, the father of the 401k, that said, like, oh my gosh, like this didn't exactly work out how I thought it was going to. So it's like and part of the reason that for a lot of folks that it hasn't quite worked out
Mm-hmm.
is what you mentioned, that responsibility. People are like, I don't know what to do with this.
Right.
So there's a big, big, big education piece. If you're going to put that responsibility on people who have lives, kids, careers, social civic obligations, a whole bunch going on. Oh, and you
Mm-hmm.
got to learn this money piece too. Because, oh,
Right.
by the way, this is the entire your future is riding on this. Your
Literally.
your your wealth and your well-being and the safety and security of your family
Mm.
depends on you getting this right. Oh, do I have your attention? You absolutely have
Right.
my attention. But now, okay, I have to carve out time to learn. I have to carve out time, like you said, to learn before I start to earn. And so, anyway, that was kind of a long winded way of
No,
saying
it's great.
all of this is what inspired me. And you continually inspire me. Your
Mm.
work, I've seen, over the years, your own evolution, your passion to the space, and your commitment to candor and showing folks, you know, the ups and the downs, the good and the
Right.
bad, and all of that matters because all of that actually does something crucial. It builds that trust that's missing elsewhere.
Powerful. Well, I appreciate you so much, and your work and your legacy speaks volumes to that. And I know that you have a new book coming out in January of 2024. So tell the good people about the book and all that good stuff.
Yes, I'm super happy to announce my 16th book.
Mm.
I guess it's really like, I'm losing count. It's either the 16th or the 17th
That's
or the
amazing. I
15th or
love it.
16th. I don't know. I think it's, but to be honest, Tanya, it's two books. So the book is called Bounce Back, The Ultimate
Mm.
Guide to Financial Resilience. And it's all about overcoming adversity and setbacks.
Mm.
And I talk about these 10, what I call dreaded D's, that happen to all of us at some point in our lives.
Mm.
Downsizing from a job, and I mentioned that I got downsized, divorce,
Mm-hmm.
death of a loved one, disability, disease,
Mm.
debt, damaged credit, Another thing that I call dollar deficits,
Mm.
which is I'm broke, I have no cash flow, I don't have a
More
retirement
month.
plan kind of
Yeah,
thing.
yeah, more month than money.
Exactly. Disasters of all kind, natural disasters, etc. And then finally, discrimination, which can also pack a punch and hit you in the wallet. So the book explains how do you overcome these 10 dreaded D's financially and emotionally. And I started with the emotional side because I often think that that's missing in a lot of
Mm-hmm.
personal finance, but I really wanted to be intentional about telling people about how do you heal and recover from some of these things. And then once you kind of have your mind and your headspace right, then you can start to make the right financial choices and decisions. Then we can address some of the money matters. So there's Bounce Back, the ultimate guide to bounce back workbook, which is a second book that I wrote as a companion to let people really customize and put into practice the advice and to have a more tailored set of solutions for their own unique circumstances.
That's powerful. I love it because I'm sure that you have found, first of all, there's so much there. I'm going to have you back on
Okay,
closer in
great.
time to when there's the launch because it's such a great time to release a personal finance book, obviously at the beginning of the year when people are reassessing things. So,
And may
you
I add
know,
one other thing,
please.
just very quickly? By the way, I've been through 9 of the 10 dreaded D's.
Mm,
So I share my story in that. And I share, of course, the stories of other people that I interviewed because I interviewed across every chapter people who've been through the dreaded D's and overcome them, and then experts in each of those categories as well. So it's
that's
really, the
fantastic.
book is like built around storytelling. I'm putting it all out there. I tell my own story. I told you how I was downsized from my job, but I tell about my divorce. I put it
Hmm.
all out there. How much I had to pay my ex in child support and
Help me,
alimony,
Lord.
I recovered. I put it all out there. Okay. So yeah.
Let's go. People retain so much better. And it also, sometimes people hold us in such esteem that we're on some pedestal and nothing
Yes.
ever goes wrong. That,
Yes.
I
No,
have some
that's
of
not
those
the case.
things. Absolutely. Such a powerful approach. First of all, I love alliteration because,
Thank you.
I love
Yes.
the written and the spoken word. So
That's
I
right.
caught that. And that's amazing that we have so many D's that could be dastardly from a financial point
Exactly.
of view, but also from the emotional point of view. So I also very much appreciate that you start from there, bringing the personal back to finance because it's
Yes.
so subjective, so personal. It's some nature, but a lot of nurture or the
Hmm.
lack of nurturing. It makes me think of, and I say a lot, at some point in time, you have been outside of your parents' home longer than you were in it.
That's right.
And life at its longest is short. And so this is my race to run. And so, in what ways can I take the lessons and the blessings and really move on from a more powerful point of view? So, a book like yours is it gives people the permission to exhale
Hmm.
and to move past shame and blame back into the centeredness of empowerment. And then all of the other things really flow. But if you don't have that right, we can intellectually talk about and have all sorts of checklists and motivational speeches. But if people
Yeah.
don't pivot from that point of view, nothing's going to stick,
That's right.
not for long.
Yep. That's good.
So tell me how people can learn more about you, stay in touch with you, learn more about your work. I will also share that in the show notes as well, but better coming from you than in my show notes. So
Okay, great. I appreciate that opportunity as well. So they can absolutely visit my free financial advice site, my blog, which is at askthemoneycoach.com. They can catch me on social media as well. Everything is either under the Money Coach at the Money Coach, or my name, my full name, Lynnette Khalfani-Cox. So YouTube, Facebook, LinkedIn, Twitter, Instagram, all of it, all
all
the
the
things.
things, all the places. That's right. Because we're big on branding. You got to
Yes,
lock it all down. You lock it
yes,
all down. So I love that too. Lynnette Khalfani-Cox, is always a pleasure. I'm so glad that we're connected and doing this great work together. And I look forward very much to our next opportunities to connect, obviously around my book, your book, and then just the work,
absolutely.
because we will always be busy. There will never
Yes,
be any shortage of an opportunity, but with that opportunity comes this great opportunity for us to fulfill our mission from a spiritual perspective, in particular for the work that we do. And so that's why I think of you and Earl constantly. And I love being on this journey with you.
Same here. Appreciate you.